Good morning. Today it's Crypto Friday for me. It's talking about cryptocurrencies. Taxation question came in. Obviously a big year for crypto. We're doing 2021 taxes at the time of this recording, and moving forward, crypto's here. Pandora's box is open. Whether you're buying Bitcoin or Cordera or any of the other altcoins or Ether or stable coins, whatever, what I'm about to explain is pertinent for you. So let's start first and foremost that cryptocurrency has not been determined to be a security under the kind of the definition. It's not really regulated yet. Thus, wash sale rules. I'm not going to get into wash sale, but the concept is basically if you sell something for a loss, you have to be out of it for 30 days before you can buy back in to be able to take that loss. For crypto, at the time of this recording, you can sell your crypto, record a loss, and buy it back a second later and create a new cost basis. It is the number one way to farm losses for tax reporting now. It's wonderful, it's beautiful, it's great. We love it. However, we do have this burden of recording crypto. On the 2021 1040, that's your personal tax return, right on the front page, right underneath your name, it's like bang, above the W-2. It's in that sweet spot. And there's a question. Did you buy or did you sell, transfer, earn in any way, any sort of cryptocurrency or financial instrument around crypto? They're actually asking yes or no right there, bang, right on the cover of the return. Why? Hot item. It's a big one. There is billions and billions and billions of dollars of unpaid taxes in this area. Now, moving into 2022, your places like Coinbase and some of these other places that are doing this, Robinhood, they're going to have to issue 1099s, just like it was a normal stock like Apple, for your selling of your crypto. If you're earning things on Coinbase by doing those little surveys, I've seen it, you can get $1 or $2. That's taxable, folks. You actually are supposed to pick that up and pay taxes on that money. It could be $20. Don't mess around with it. Claim the $20. Mark the yes box. It is okay. I tell you what, the IRS is going to get everybody's name and social security number from Coinbase and all of this stuff. If they want it, they got it. Don't mess around. I don't care if it's $10, $20, $1,000. Do it right. Claim the income. Don't try to move it to a private wallet and a DEX in whatever other country you're in. Just do it legitimately. If you don't want to pay taxes on crypto, give up your passport, move to Portugal. 0% tax on crypto. There you go. You would not be a US citizen anymore. You do not have to pay taxes on your crypto if that's what you want to do. Don't advise it. I love America. Your choice. However, how do we do this? How do we record crypto? It's actually pretty challenging. You need to know every single transaction. I'm sorry, but you have to know I sold this much Bitcoin. I bought this much Bitcoin for the port that I sold, and you have to match it up. Just like a stock sale, if I buy a share of Apple, sell a share of Apple, I have to link the two. I have to have a cost basis on this. It must be reported on your tax return just like that. Now, some tax accountants might get a sheet, right? So if let's say it's Coinbase, because Coinbase is a big one, and Coinbase uses and partners with a place called CoinTracker. Well, I might get from CoinTracker a detailed sheet related to it where it gives me a lot of information. Well, we as tax accountants, we may lump some of it and kind of aggregate some of it so we don't put in 1,700 pages of day trading activities in crypto. And then we might attach this as an attachment to our tax return so that we can give the IRS the backup of it. That is one methodology that works great to kind of speed it up so you don't get a gigantic tax bill from your tax accountant. It can be done that way. But just know, you got to know how much you sold it for. And the lot that you sold, right? It's your burden. This is not coming on a 1099 this year. In the future, we think it will be. I do believe that in 2022, that we're going to start to get these 1099s for proper reporting. So don't hide it, just record it. Don't be scared. It's okay. They're not coming. It's just like any other type of thing. They just want us to record our income and do it the right way, okay? So it's not a security. There are no wash sales currently at the time of this recording. You can sell things right at the end of the year, pick up losses, right? If you haven't sold any, you've just bought crypto, you do not have crypto taxable event. Buying and holding is not. If you've earned any, right? If you've mined any, if you've staked any, or anything related to that, that is a taxable event. Mark the yes on your tax return, do it right, record the transactions, use spreadsheets, use your coin tracker. It's not that difficult. Don't be afraid. It'll all be just fine. All right, have a good one.